Ladies and gentlemen, good day and welcome to the Q2 FY22 earnings conference call of NATCO Pharma hosted by Investec Capital Services. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Swapna Bhandarkar from Investec Capital Services. Thank you and over to you, ma'am.
Thanks, Jacob, and good morning, everybody. Firstly, let me apologize for the delay. We were facing some technical issue on our side. Having said that, I welcome all to the Q2 FY22 earnings call of NATCO Pharma. We have with us the management of the company, Mr. Rajeev Nannapaneni. He's the Vice Chairman and Chief Executive Officer. Joining him is Mr. Rajesh Chembian. He's the EVP and for Crop Health Sciences and Head Investor Relations. Good morning, gentlemen, and I now hand over this call to Mr. Rajesh to make the opening remarks, post which we will begin the Q&A session. Thank you.
Yeah, thank you, Swapna. Yeah, this is Rajesh. Yeah, good morning and welcome everyone. Again, apologize for the slight delay in the call. So welcome everyone to NATCO's conference call discussing our earnings results for the second quarter of FY22, which ended September 30th of 2021. Again, as a disclaimer, during this call, we may be making certain forward-looking statements or statements about future events, and anything said on this call which reflects our outlook for the future must be reviewed in conjunction with the risks that the company faces. I'd like to state that the material of the call, except for the participant questions, is the property of NATCO and cannot be recorded or rebroadcast without NATCO's express written permission. We'll begin the call with results highlights and followed by an interactive Q&A session. Again, we hope that you've received the financials and the press release that was sent out earlier. This is also available on our website. So NATCO recorded a consolidated total revenue of 415 crores for the second quarter, which ended on 30th September 2021, as against 827.9 crores for the same period last year. The net profit for the period on a consolidated basis was 65.1 crores, as against 203.9 crores same period last year. The decline in revenue and profits compared to last year's quarter is primarily due to a one-off contribution that we had in the last year's earnings. The company is poised for growth during the later half of this financial year, and we're confident of a strong rebound in business. During this quarter, lenalidomide product in Canada, everolimus highest strength product in the US were launched. The revenues from these products will be realized in the immediate quarters. The company is well prepared for its major launch of lenalidomide in USA during Q4 of this financial year. Segmental revenue split for the quarter, as we have disclosed. API, we stood around 76.3 crores. Formulation domestic, around 99.8 crores. Formulation exports, which includes profit sharing and also the foreign subs, around 190.5 crores. Other operating and non-operating income stood at 45.1 crores. Crop Health Sciences, around 3.5 crores for the quarter. Thank you all. We'll take the questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question from the line of Samir Shah from ValueQuest. Please go ahead.
Good morning. The first question is on the base domestic business. What are the growth drivers from here in terms of, say, product launches, etc.? We are clocking 100 crore a quarter. So what are the plans in terms of launches?
We have some good launches, Samir. I think we've lined up a couple of good oncology launches that we're having this quarter. We're launching cabazitaxel this quarter in Q3, and we're launching azacitidine tablets this quarter. And we're expecting approval of molnupiravir this quarter. That is going to be a big one. So not only it will contribute in domestic, it will also contribute in the export business. So that is probably going to be the large, I think, in terms of like high impact, molnupiravir will be a big one, I think, in this quarter. So we're expecting that DPGI should clear the file in the next week. We're expecting a meeting next week, SEC meeting, and hopefully if everything goes well, we should be able to launch in the month of November. I think that's my expectation.
And the patent thing with the centralized patent pool, that is done, or that is also...
We have applied, Samir. So what we have done is, as of today, there's no patent granted. So, but we have applied to medicines patent pool, and we are expecting a license. I think that's our expectation. Okay. Thank you.
And on the agrochemical side, how is the thing doing? We've launched pheromones, and we saw that some announcement by Punjab government that they are going to try out pheromones for this Rabi season or something.
We have done, I think, 3.5 crores. So that primarily is driven by that product that we've used for cotton, which is a pink bollworm. Right now, the farmer is not, I think everybody is not aware of the product. So we're creating product awareness. So the brand will take some more time to grow. And regarding Punjab and all, we have heard about it, but we've not seen any orders per se. But I think that's where we are. That's it. Thank you.
Okay, so thanks. And second question is on gross margins of 75% this quarter. So what led to the drop, and will US launches take it up again, or there was some exceptional in this quarter?
We didn't have any great triggers, Samir. I think that's why the gross margins are on the lower side. But I think, we launched everolimus on October 1st. So we only did stocking quantity of everolimus this quarter. So I think hopefully we'll start seeing some sale in Q3. And lenalidomide also, we launched it in September, if I recollect correctly. So I think now we've bid in the tenders and all. So the benefit of that, you'll actually see it play out in the next couple of quarters. So overall, I think, these two launches are going to be very good launches. And obviously we have, molnupiravir coming up. So that will be a very good launch. Not only in India, we're expecting a reasonable set of orders for export. And in addition, it'll be very competitive, but I think the pie is large enough. So hopefully we'll be able to do reasonably all right. And then, of course, we have Imbruvica coming up in Q4. So I think overall, I'm positive. I think, we will pick up as we go along in Q3 and Q4. Okay? I'll go to the next caller, please. Yeah?
Sure. Yeah.
Sorry, I correct myself. I said lenalidomide. I meant lenalidomide, not Imbruvica for Q4. Yeah. Thank you. Next question, please.
Thank you. The next question from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah. Hi, Rajiv. Thank you for taking my question. So firstly, hello?
Yeah, go ahead. Go ahead.
Yeah. So can you talk about the market formation limit in Canada in terms of pricing competition and how big is the opportunity for us?
It's a good product. I don't want to say anything right now because it's preliminary stage. It should do well. I think I was interacting with my sales team yesterday on the phone. I think our sales team is very comfortable that they'll do well with the product. What market share and what price and all, I think it should do well because the REMS product, I think it'll not erode, like the regular generic. But we have to see. At this time it's premature. I think if you ask me this question and end of Q3, I think I can give you a better sense of where we are and how much revenue we're making. But as of now, it's premature. Yeah.
Right.
But
okay, fine.
My sense is it should do all right.
Right. And secondly, on the Revlimid in US, right? Can you provide the split between various strengths? Because Dr. Reddy has got the final approval for 2.5 and 20 mg strength, and they are going to launch, I think, before us.
Or for those two strengths? Is that the question? I think for those two strengths, your question is, if I understand correctly, they got approval for 2.5 and 20 before.
Yeah.
And we don't have the full approval, and they got to launch before us. Is that the question?
Yeah.
If I understood correctly. See, I mean, it's there in the public domain. We have first to file on 5, 10, 15, and 25. They have first to file on 2.5 and 20. We have full approval for, for the strengths where we have FTR, and we have tentative approval for the strengths that Reddy's has full approval on. So we have to wait for Reddy's launch, and we can launch after their 180 days. I think that's my understanding of the situation. Yeah.
Yeah, that's the right understanding. I wanted to understand how the market is split between this strength.
I think majority, like top of my head, I don't recollect, but I think if I were to make I don't want to speculate, but I would say 90% of the strengths are covered with us. More than 90% of the strengths.
Okay.
Roughly, I mean, don't hold me to it, but I think it's in that ballpark. Okay.
Thank you.
Next question, please. Next question. Next caller, please.
The next question from the line of Prakash from Axis Capital. Please go ahead.
Yeah, hi. Good morning. Question on again on this, the Canada Revlimid launch. You spoke about, feeling good about the market share ramp up, etc. If you could help us understand how does this work in Canada? I mean, US is a totally different market where you have a partner. So this is via partner, and what is the market opportunity we are talking about?
Here we are not partnered out, Prakash. We bought out our partners, so we're doing it ourselves. Okay, that's the first clarification I'll make to you. The second thing is we're doing it ourselves, so all the economics are coming to us directly. Okay, that is the second point. In terms of Canada, what is happening is, I'll tell you what is happening. There are 4 generic launches. There's Sando, NATCO, Reddy's, and Apotex. Apotex has their own registry, REMS program. Reddy's has their own REMS program. Sando and NATCO's product is on the innovator's REMS program. Okay, so we have decided to go with the innovator's REMS program. So we are getting good traction. I think there are some people who don't want to change the REMS, so they're comfortable continuing with the innovator's REMS. So that business we're able to get. So that's how the market is. But
what is the sir, just on the size of the opportunity on the branded, if you could help so that we can break it up, that whether it's a $10-20 million product for us or it could be higher. Just on the market size, what would be the market size?
We're only speculating, Prakash. I mean, now you ask me a question that I don't have an answer to, because the problem is IMS doesn't cover it properly. Because it's such a controlled distribution, the sale numbers are not known. At least with Revlimid, the innovator discloses his sale. Based on that only, I'm able to estimate. If you take IMS numbers and if you look at the balance sheet, their numbers, they're always very different. So if you were to make an estimate, I think the sale is probably like 400 to 500 million. I think whatever public domain documents I've seen, or I think I saw one Aptex review which I estimated. I think it's probably around that size. So I think that's on the size. How much market share will we get? Prakash, I think it's doing well, I will say that. And I think the benefit of that you will see in the next few quarters. I think if the numbers that you're speculating, if you get those numbers, I think I'll be very happy. Honestly, if we make $10 million, I'll be extremely happy. But will we make it? How much will we make and all that? I think only time will tell. I think you ask me this question next quarter, I think we'll get a better feel for it. I think then we'd already be in about 4 or 5 months into the launch. Then we can probably make an estimate of how we're going to do. So as of now, I can't answer the question. But overall, I think we're positive. I think our sales team is positive. I think we should get good market share. Okay?
Okay. And on the next question is on the base business. So we have now a good cash pile, and we expected to have a very, very strong cash flow. I'm sure you have evaluated a lot of assets. Is there any progress on that side where we want to, add something which is, a more continuity business, and have stable India or something like that? Is there anything? Are there any gaps you have identified within India? Are we anywhere close to closing anything?
Prakash, I think I've said this, I'll just say it again. I think there are two weaknesses our business has. That's the elephant in the room. So I'll say it the way it is. One is that we need to have a steady branded generic business, which we don't have a larger size compared to our other listed peers. Second is we need to have a front end in the US. And I think I've told you in the past as well, we're looking very obviously, all the negotiations are, at a critical stage, so we're not closed or anything as of now, so there's nothing to report at this time, but we're striving to get a front end in the US. I think we're really shopping for different assets, and hopefully we'll be able to close the transaction. And again, we're shopping for a branded generic portfolio, either in India or in the ROW market. I think these are assets that we're scouting for. But I also want to say something that we don't want to do a deal in a hurry where we overpay for an asset. And I also mentioned this in the last conversation. Assets in India run away dramatically. So that's why, I prefer to do a smart deal rather opposed to a bad deal. You know what I mean, Prakash? So I don't want to set a timeline on this. But very clearly, I think we have time. I think we'll do it. I'm very clear that we have to do it. And we will do it. But we'll do it for the right asset. And that's what. Okay?
Okay, perfect. Thank you. All the best.
Thank you, Prakash. Next caller, please.
Thank you. The next question from the line of Rahul Dira from Avacus. Please go ahead.
Hi, Rajiv. Rajiv, so couple of quarters we've been watching whether it was a case of patent against the FMC for our agrochemical molecule or the recent most against the Novartis, the entrance into molecule. So we've been losing out on a lot of cases, in terms of patents.
Okay.
So, any thought process there, has the R&D strength weakened recently, or what's the thought process there now? From Ibrutinib to entrance to CTP, I know a lot of cases have been against us.
I'll tell you something. When you do these things, you get some right, you get some wrong. Okay, I think that's how we have to look at this. I can't guarantee you success. All I can do is I can tell you what our strategy is. Even like the two cases that you alluded to is, it obviously is a reverse. I mean, because we got injuncted. FMC got delayed till 22. But again, I'll give you two successes that we have had. I mean, the Baricitinib is a good success that we have had. That did extremely well in the pandemic. We've launched another product called Capacitinib. We didn't get soon, and we're hoping that we'll also settle with Molnupiravir. See, when you roll the dice, I'm telling you, you're going to get half of them wrong, and I think you can't sort of start obsessing too much about it. I think for every one success, Revlimid was a success in Canada, for example. So that also came through litigation. Everolimus also came through litigation. So I mean, you're going to get some right, you're going to get some wrong, and I think that's how it's going to be. And all I can do in this call is tell you what we're doing, and I think our pipeline is strong. And to further to your point, we're going to do two first to files in this quarter. Probably shared or sold. We don't know how it's going to be, but I think we're going to keep at it. But you also have to understand we follow a high risk model. You're going to get some right, you're going to get some wrong. You have to go, as they say, you have to roll with the punch. When you lose, you lose. But I think the pipeline goes, and if you get even one right, you're set, right? So in a decade, I always say, you get 4 of these things right, your whole decade set of earnings are done, isn't it? So that's the nature of the beast. I think that's the best way I can answer that question. Okay?
Sure. And recently we've seen on the balance sheet kind of large buildup of the inventory. So this is regarding the Tamiflu season coming up, or it's the Revlimid
Revlimid doesn't have so much inventory. I tell you what we have built inventory on. I built on all the pandemic products. So we have a lot of inventory on Apixaban, which did well for us in Q1. If you see, domestic was 200 crores in Q1, and it's primarily driven by Apixaban. So we have reasonable amount of inventory on Apixaban. We have inventory on Molnupiravir, some of the packing materials, and we've ordered a lot of more. We're going to order a lot of raw materials now. And
We have inventory on oseltamivir. We have inventory on baricitinib. We have inventory on amphotericin B. We have inventory on on CTPR, the case that you just alluded to, which is a large set of inventory. So we built substantial amount of inventory, and all of it is dated. So I think we're comfortable. I think we believe that we'll be able to liquidate it. See, these are again business gambles, right? I mean, we expected that these launches will happen. And again, with pandemic, what we also found is unless you have stock, you can't succeed in pandemic. So we're also making a bet, right? Somewhere in this world, there'll be another resurgence of the pandemic. And how do you make a bet? By building inventory. Because when the demand happens, all demand happens in 45 days. And if you don't have stock, you can't service the demand. And very deliberately, I think we overshot our inventory targets by more than 200 to 50 crores. But so that 250 crores are reflected in finished goods and in raw materials. But then that's the nature of the beast, my friend. I think we have to take the gamble. If you get one of these things right, suddenly you'll have a huge upside. So, and that's how it works. Okay?
Fair point. Thank you. Thank you so much.
Okay, thank you.
Thank you. A reminder to all participants, you may enter *1 to ask a question. The next question from the line of Kunal Randeria from Edelweiss. Please go ahead.
Good morning, and thanks for taking my question. So my first question, Rajiv, is on molnupiravir. Now, several of your Indian peers have also got a license, and India's largest company also put out a press release saying that they are also gearing up for launch. You seem to be very confident on molnupiravir opportunity. So just want to understand the reason for the optimism behind it. Is the market big enough for everyone, you think? And just know what's the kind of commercial opportunity that we can expect from this product?
I think we're the first one to file for the clinical of this product. So we've probably been the most aggressive in terms of the validation batches, building up inventory, doing stability and all that. So we are prepared in every sense in the raw materials and the supply chain. And so I'm a little confident. But problem with pandemics, Kunal, I think, I always say with a note of caution is that you will go through months when there's no demand at all or very low amount of demand. This is what we're seeing with the pandemic portfolio. When the peak demand happens, it becomes 20x of whatever your base sale is. But you always have a base sale which sticks around 5%, 7% of the peak demand. And suddenly in like a month and a half, you'll have a 25x demand. So molnupiravir is just not only India. No, I think let's not obsess too much about India. And then if we launch right now, there are no cases in India, right? So I think you'll see a slow takeoff. But the question is you position yourself, promote it when the actual pandemic or a third wave or something happens. When there's a sudden spurt in demand, let's say you are getting about 10% market share. Your 10% market share on 10 crores monthly, let's say monthly sale becomes, that suddenly the market expands from 10 crores to 1,000 crores. Then you have 10% of 1,000 crores, and suddenly you're into an interesting situation. That's how this business works. You have to be promoting it, be there, and just wait for something to happen. And the opportunity is just not India, my friend. It's also outside India as well. So I think if the MPP license comes through, which we're hoping, then I think the opportunity is elsewhere. And the pandemic is fairly strong outside India at this time. You know that. So there are a lot of opportunities. So I think you have to take it as a global view. And for a company our size, if I get a 1,500 crore pop, I'll be extremely happy. So I think that's where we are.
Sure. That's helpful. And secondly, in terms of, if you can just maybe guide whether you'll be able to launch Nexavar in the next couple of quarters?
I can't answer that question, my friend.
You can't answer that.
We can't.
No, I have to say. Sure.
Okay.
Sure. And just lastly, if I can squeeze in, what's the cash position at the end of the quarter?
Rajesh, you have the sheet, no? I think that, yeah. What he's asking is what the cash is. Cash and net debt. Okay. So I have the sheet here. It's 889 crores in cash, shares, and bond liquid assets. And we have a debt of about 346.85 crores, of which about 54 crores is bill discounting. Yeah. Okay.
Okay, got it. Thank you.
All right. Thank you.
Thank you. The next question from the line of Vishal Manchanda from Nirmal Bang Institutional Equities. Please go ahead.
Thanks for the opportunity. A question on molnupiravir. Just wanted to understand if you are backward integrated to the API level.
We have tied up all the supply chain. I think we're ready to go.
Okay. So you would be sourcing the API from someone else?
I don't want to actually reveal what we have done, but what I'm saying is we're ready to.
Okay. Just a follow-up on Molnupiravir. So on the export, to tap the export market, would you also would you need to be an authorized licensee, or if you even if you don't have, you can still tap the export market?
I think what we're saying is that we're hopeful of getting the MPP license, and I think which will allow us to tap all the major countries which the license is available for. I think that's our expectation.
How long can that take, getting that license from MPL?
Again, I've applied. I'm hoping we'll get it. I think in the next few weeks. I think that's our expectation. I think we'll see. I think we'll see. But again, I said we've applied and we're waiting for the outcome.
Okay. And on the gross margin, you had said there is no profit share during the quarter from the new launches. Is that right? And that led to the gross margin decline?
The benefit of the profit share will happen in the subsequent quarters because the launch only happened at the end of the quarter. Lenalidomide and Epitinor.
Okay. But you would have profit share from the other two launches, Afinitor and Zortress?
No, see, I tell you what it is. Epitinor will be profit share because the partner with Breckenridge. Lenalidomide will be our own sale. We'll see. What we have done is only done a transfer to a subsidiary. The sale will, once the sale is accrued in the market, that's when we actually we're able to book sale.
Okay.
Okay.
So there was no write-off on inventory as such?
As of now, no. I think routine write-offs are there. I think that is already shown in the balance sheet. For the larger bets that we made, no. Like CTPR inventory and the pandemic inventory, we have not done a write-off yet. I think we are hoping that we'll be able to liquidate. The product has dating, so I think we are not in a hurry to write off. I mean, the product has dating between 2 years to 5 years, so I think we'll make a call as we go along.
Okay. And just on lenalidomide in Canada, you said you are on the innovator REMS. So does that adversely impact you or favorably impact you?
It's yes or no. I mean, it's one of those judgment calls. I think our CEO decided to go with the innovative REMS because he felt that a lot of reimbursement will be very comfortable because already the REMS is already established. So people don't want to move to a new REMS. So that has certain advantages. But obviously, if you do your own REMS, you have more flexibilities and that comes with the established rigid REMS. So, but I think we have made a call to go with innovative REMS. I think he feels good about it. We'll see how it plays out.
Okay.
Thank you. Next caller, please. We'll give an opportunity to someone else. Yeah. Please. Next caller, please.
Thank you. Ladies and gentlemen, you may press star 1 to ask a question. The next question is from the line of Rajat Sethia from iThought PMS. Please go ahead.
Hi, thanks for the opportunity. Rajiv, my question is, if we, I wanted to understand what is the core profitability of our business. Is it 300 crores or is it 400, 500 crores? Because one thing you have said in the past calls is that, from cycle to cycle, we have grown our PAT from 150 crores to 450 crores. But if we take out the one-time settlement for Revlimid Canada, seems like base is continuing to squeeze.
So what you're asking me is, if you see, I tell you what.
There's an element of, because as per the past understanding, we thought it is 450 crores or so.
Let me answer this. So let's be very specific of what you've said, and I'll tell you what it is. Our earnings last year, there's an element of that's coming from the settlement. There's an element that's coming from the base business. I would say 2/3 of it came from the base business and 1/3 came from the settlement. And this year also, I think we look at it, we have a run rate of about last quarter we did 75, this quarter we did 65. Let's say we keep the same run rate, we'll do about 300, something like that. Plus we have the initial launch quantity for Revlimid. So this is what, so the question with our business is, you can't look at, we are not like the other companies. We always bet on something unique every year. I mean, this year we made a bet on CTPR and Revlimid. Looks like Revlimid is going to happen. CTPR is not happening. If you look at our 5 years of earnings, there's always an element of base business and there's always an element of the X factor that comes with whatever we do. If you look at consistently in the last 4 or 5 years, we're able to pull off something or the other. If you look at it, initially we pulled off Tamiflu exclusivity. Then we had the Tamiflu exclusivity. Second year we got it from the pandemic. There was a flu season that we benefited from. Then we had the Copaxone launch. Then we had, Canada, had an upside. And this year we have the US upside. If you see consistently, right, we're able to pull something off something every year consistently. We look at 5, 6 years. Before that, we pulled off the Hep C portfolio. So I think that's the nature of our business. I mean, all I can do in my calls, I can tell you like this is what I'm trying and this is what we're speculating. And this is what we get from these earnings, and if these events happen, and this is what I'll get extra. So that's the nature of our balance sheet, my friend. I mean, I don't know how to answer your question. So we're not like your other peers, which have stronger, more diversified, larger balance sheets. I think we always try things which a lot of people don't want to try. But I think there's always a high amount of risk on what we do. But if we get it right, then there's a reasonable upside. I think that's how it works. Does that answer your question, hopefully?
Sure.
Okay, right. Okay. Can I conclude with you, or can I go to the next caller, please?
Yeah. Just one more question, if you allow.
Okay. Go ahead.
So as an investor, what should we take away from NATCO? I mean, if you want to understand the next 5 years of the business, because for us seems like in the next 5 years, right now it seems like Revlimid is there, and seems like we are going to be squeezed down again. Once Revlimid goes out. So can we make a solid core in the next 3-4 years, or you think we will be depending a lot on the one-off payoffs?
See, we do a little bit of everything. Let me just lay out, for example, what I think are interesting, which we have publicly disclosed so far. I mean, in the next few years. I mean, for example, Revlimid US is obviously quite interesting, but I also mentioned about Revlimid Canada and Epitinor in the US. Those will contribute to the base business. It's not that we're not working on the base business. I mean, for example, in the next few years, for example, we have Tracleer, we have a settlement date for Bosantan suspension tabs, which is an interesting product. We have CTPR, as much as we have not won the case. The launch date as of today is August 22. That will be a reasonable pop. We have, for example, we have a settlement with our partner in Australia launch of pomalidomide and lenalidomide. So that's an interesting upside that will play out in the next few quarters. We have trabectedin filing with Sun for Europe hospital business and the US Paraco where we are FTS. So, I mean, these are, some examples of products which could, do reasonably well, which are not like Revlimid size, but reasonable, 10 million, 15 million, 20 million type, 30 million type of opportunities. And you have Nexavar, which, that kind of fits into that sort of bill. And all this will play out in the next 4, 5 years or 6 years. So it's not that, we just have we're not a one pony. We have other, other filings. By the end of the day, Imbruvica, obviously the litigation didn't go well. But again, we have an FTF position on that. And so let's see how that plays out. So that's the end of the decade. And I also said a few minutes ago, we have 2 FTFs filings that will reveal what they are in the next quarter based on the acceptance by the FDA. So the pipeline is strong. And as I said a few minutes ago, you get 3 Revlimid type of opportunities right, and you get like 10 of these mid-size opportunities right, your decade is done. So I think that's the focus. And regarding the core business, and as I said, we have enough money. I think that's not the challenge. I think the bigger challenge is how we deploy that money to strengthen our core business. And I think, as I said, we're looking into assets. I know I'm not done an acquisition. I'll not say that we're not done. But I'm not done because I don't want to do a bad acquisition. And I think that's what it is. But certainly, I think we have time, and I think we'll do it at the right valuation. I think that's what it really comes down to. Okay?
Sure. Thank you.
Okay then. Thanks. Thank you. Next caller, please.
Thank you. The next question from the line of Danish Misri from Investor First Advisors. Please go ahead.
Hello. Thank you for taking my question, and good afternoon. I had just two questions. The first was on your domestic business, which was there, and you've touched upon in earlier calls. You touched upon how the onco piece has taken a bit of a bit of a punch because of COVID situation and patients not going to hospital. So has that kind of turned around for us now? How do we see traction in the domestic business going on? The second was that in the agrochem piece, whatever we read, we get the idea that possibly the product is going to go off patent next year, and we can look at a full-fledged launch next year. So is that assumption right, or is there any, or are there any more cases, etc., to be crossed over before we can launch the product? Lastly, we have always talked about trying to get into other therapies like diabetes and cardiac. So any further progress on that? Thank you.
Okay, let me answer one question at a time. So first you asked me about how is the domestic business doing, particularly onco. Yeah. So onco has been stable now. I think we are seeing some price erosion, but I think things are more stable now. I think we'll see more steady state revenue and volatility will have dropped now. I don't see more volatility now. I think the whole Hep C portfolio has now collapsed to 2 crores a month now. So I think you'll not see much volatility in earnings. So I think that sense, I think everything has settled down. The second question you had was what is it that we're doing to enhance the reach? We started a new division recently called NATCO Reach. I think one thing we have done very well is covering only specialists. I think we've done gastro very well, onco very well. We've done cardiologists and a little bit of endocrinologists, but we've never done the mass market large volume. So we started a division called NATCO Reach, which covers these GP segments. And I think particularly I kept molnupiravir in mind. So because a lot of the times when people get sick with COVID, the first they reach out to their GP doctor. So we have a segment that covers consulting physicians and GPs. So the segment, molnupiravir, we're pushing very hard. So we have a specific focus, a division's focus is completely on molnupiravir. So that's why we are very bullish about this product. Again, I am also mindful of the fact that COVID is on the lower side. So you just have to position the product for the future. And you had a question about the agro business. Yeah, I think based on the let me conclude, yeah. So based on the patents that we've been sued so far, I think our understanding is that we could launch in August 22. And this is not the only product. As I said, we're looking for other agro products. We see other opportunities like CTPR. We have not publicly discussed what these opportunities are, but there are other opportunities. I think there's very little litigation in agro. And I think there are a lot of opportunities in this business. And I see that, we could do more interesting filings, both in agro and in pharma. So I think I'm bullish. But obviously the outcome of the litigation is what's going to determine the upside of the business. I think that's the challenge. I think when we are actually filing these products and initiating litigation, I think we'll obviously speak about it when it comes to that. Yeah.
Got it. So is it safe to say that the domestic business would continue, the formulation will continue with about 100 CR run rate going forward, or do we see that kind of slowly inching up?
It will inch up. I think stable now. I think my expectation is very high on molnupiravir. So I think molnupiravir should help us out. So as I said a few minutes ago, even if we get a 50-60 crore pop on that business, then that's almost like adding 15% growth to our business. Right? So for our low base type of business, I think it's a reasonable jump. And so I'm bullish. And at the same time, if there is another pandemic or any small level pandemic, I think we know that COVID is going to be around. So then we're well positioned for an extra 150-200 crore profits.
Got it. Understood. Thank you so much. And
thank you. Thank you. Next caller, please.
Thank you. The next question from the line of Ritika Agarwal from ValueQuest. Please go ahead.
Hi, sir. Thank you for taking my question. My question is on the capex front. We spent 85 crores in the first half on capex. Could you explain the nature of this and what is our capex guidance for next 2 to 3 years?
Just one moment, miss. I'll just take it up. Give me a moment. Yeah, I'll just take out my notes. So far, I think, in that region, we have spent about 72 crores is what I see here. But again, I think that sounds about right. I think we just, these are just maintenance capex. We're not doing any large capexes per se. We're just replacing reactors, replacing blocks, and so on and so forth. And we're just replacing blocks, but nothing dramatic. I don't think we'll spend more than budgeted capex per year is about 314 crores. So my sense is we'll probably spend about 60 to 70% of it. I think that's where we are.
And so over the next 2 years?
I don't see any large capex spends, honestly. I think we have enough assets now. I think like you look at export business, we have one plant in Hyderabad. We built another plant in Vizag. So both are FDA approved. So we have enough capacity there. So we're trying to get more products in so that we can utilize this capacity. So that sense. API also gets fairly set. I think we have one facility in Hyderabad and one facility in Chennai. Our domestic, also I think we have one facility in Dehradun and in Guwahati, and agro also we have a facility in Nellore. Yeah, I think facility-wise, I think we are good. I think we did a lot of capex in the last 3 years, and I think we are well positioned. I don't see any large capexes as of now. Nothing dramatic. I think. Okay.
Sure, sir. Lastly, on Coragen and Imbruvica litigation that is going on, any timelines you would like to call out? When do we see things materializing or things coming to some conclusion?
I can't answer that question, but I'll try answering it. August 15th or 16th, I think, is the next scheduled hearing for Coragen in India. So let's hope we're able to wind up the hearing and the judge reserves the decision. But again, we can't say how these things go. So it will be hard to suggest. So December 15th and 16th. So that's the next date of hearing. And on the Imbruvica, we have filed an appeal. So typically appeal in US takes about 18 to 24 months. So let's see how it plays out. I think more or less, that's my understanding of what's going on. Okay?
Okay. Thank you so much, sir, and all the best.
Thank you. Yeah. So next caller, please.
Thank you. The next question is from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah. Hi, good afternoon. Am I audible?
Yeah, sure. Go ahead.
Just two questions. One is, if we look at the export business with the profit contribution, like for last 3 quarters, we were doing a run rate of 150 crores. And in this quarter, we've done 190. But if we go by Teva's call, they said the Copaxone prescriptions in US have declined further. So so have we seen a further decline in Copaxone revenue, and like 60-70 crores is from the new businesses, or that 150 crore was the base and this 50-60 is the new products which we had launched? Just if you can not give the number, just an indication of how's the...
At least I think I don't remember the market share that we have at this time. I think from what I understand, our market share has increased. I think we're actually doing well now in Copaxone market share. Okay. And in terms of sales, it's been stable, my friend. I have not seen a decline in revenue. It's been fairly stable the last few quarters. Okay. And in terms of the increase and all, I think we had some ups and downs. Last year, same time, Q1 and all, we sold a lot of chloroquine. So that vanished. So then now I think there's a pickup because of Epitinor. So we had Tamiflu stocking last year. This year we don't have it. So these vacillations keep happening. I think it's part of the business. I think. Does that answer your question?
Yeah. Secondly, in Zortress, what we understand, it was a 2-player market and we were the 3rd player to enter. And I think it was a $200 to $250 million product. So has there seen more players entering the market, or is it still a 3-player market? Just some sense if you can give.
I don't remember exactly what you're saying. I think the first generic on that has been Hikma. And then... And I think we got approved after Hikma. And I think Intas got approved, if I remember right. I don't remember who the 3rd player is. I don't want to speculate who got Par or Intas. I don't remember. But what you said is right. I think it's like a 3-player market. You put me in a spot. I don't have an answer to your question. But I think it's like 3-player market. I think that's my understanding. The market size is a little smaller than 200 million, I think, before it went generic. But I think in terms of sales-wise, my friend, I think we're doing better with Epitinor. I think that's what my understanding. Especially Epitinor 10 milligram has done extremely well for us. I think that's what my understanding is.
Okay. And lastly, in September quarter, we generally used to fill this Tamiflu APIs for the flu season, and which used to reduce our gross margin. But this time there is no Tamiflu API sales, and API sales are largely in line with what we've been doing. So, but still there is almost a 500-600 bits fall in gross margin. If you can just help me understand what has changed exactly. Because even if I compare against June quarter, there was a lot of this COVID sales which was there in our numbers, and which was a lower gross margin business, which I suppose is not there in this quarter. So I'm not able to add these two.
No, and the answer is very simple. You only answered the question. I mean, we used to have, if you look at traditionally, we followed our numbers for the last 4-5 years. We used to have a lot of stocking quantity of oseltamivir, and now we don't have it. The reason we don't have it is because of behavior change, and this is what has happened. So basically what has happened is, because of COVID and the masking and the vaccine and all, the number of people, oseltamivir sale has dropped dramatically. So there are practically very little retail sale, except for pandemic supplies or few government supplies we're doing here and there in some territories. Otherwise, the sale has completely collapsed. And it also has affected our base revenue dramatically because there's absolutely no sale. And we have seen that across the world. If you observe, number of the cold medicines, allergy medicine sales have dropped dramatically because of COVID. And that has been one more challenge in our earnings. I mean, that's the nature of, I mean, this is an event that has happened. And so we're trying to adjust now. I think we have removed nearly that EBITDA is completely gone missing now. So I think that's the challenge that we're facing. So I think it doesn't look like it's going to get better. I don't see that product coming back the way it used to be. That's the way it is. So, yeah. Okay.
Sure.
Okay.
Thanks.
Thank you. The next question from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Yeah, hello. Am I audible?
Yeah, speak a little louder, man. If you can.
Oh,
Yeah.
okay. Sir, can you split the, give some idea of the Eliquis sales, bump up which could have had because of COVID? Because if I understand it, pre-COVID, Eliquis would have been on an annualized basis a 60-70 crore product for you. Or am I?
Generally, I don't give split for competitive reasons, my friend. I stopped doing that for the last few years. For competitive reasons, you're just giving away what you're doing. So, I mean, broadly, I'll tell you trend-wise. I think you're right about Q1 having a good representation of Apixaban. But we don't give. And Q2 onwards, the bump is not there. Clearly, I think what you said is absolutely right. Split by product, I'm not doing. For strategic reasons, I'm not doing. Yeah. Okay.
And second question is around the onco portfolio, which I think last year took a sharp dip because of COVID. Would it be fair to assume that when onco normalizes, you would have hit back the FY20 sort of numbers on oncology, or has it settled somewhere below that, and with the new product additions it will go up?
It has settled down, but it has settled down slightly lower than what it was pre-COVID. And I think it's mostly because of price erosion. But it has settled down. I think the sort of swings that you saw in the past are not there.
And the other products which you did in C&D other than Eliquis, products like Pomalyst or Ticagrelor, if you could give some idea of how those are faring for you.
Ticagrelor has done reasonably well. Dabigatran has done reasonably well. But Ticagrelor, Dabigatran, Apixaban did extremely well because of COVID. So because they're all used in COVID treatment. So in that sense, I think there's been a pop, but now they've settled down to more normalized sales. But I think all the brands are doing reasonably well. But Apixaban is probably our biggest product in that division.
Right. And sir, if I'm allowed one more.
Yeah, sure. Conclude.
Yeah. TG Therapeutics came out with data on ublituximab for multiple sclerosis, and at least the data that they put out seems pretty healthy and strong. Do you consider this as in future, obviously, a possible competitor to Copaxone?
Which product is it? I'm sorry.
Ublituximab.
I don't know, my friend. That's a question I can't answer. I don't have an answer to that question. I'm sorry. Okay. Right. Yeah. Thank you. Next caller, please.
Thank you. The next question from the line of Nitin Agarwal from Capital. Please go ahead.
Hello. Hi, Rajiv. Rajiv, on the oncology business in India, has there been any change in the market competitive dynamics over the last couple of years?
I mean, there is more price erosion. Things are more settled down now. I would say that there's going to be... See, the 2 years, two things have happened. One is price control. There's price, and because of price control, MRPs would drop. Because MRPs would drop, then there were further discounting that was expected by the supply chain, so which brought down further margin. And then you had, a couple of events like COVID. We had COVID in May, June, July, as you're aware, and then we had COVID last year in early COVID in May, June of last year. So whenever you have these events and then patients coming back, so we have a fair amount of disruption. But right now things are stable now, Nitin. I don't see much. You'll see more consistent revenue now, except for when we stock products for new launches. But otherwise, we're seeing fairly consistent numbers. But they're lower than what they were pre-COVID numbers because of competition. Okay.
But Raj, just to sort of push that, has the market been impacted by entry and more competitive pricing action by some of the newer guys, or has there been multiple new guys who entered the business, anything like that which has happened in this space?
That is true of anything, right? I mean, generally domestic is fairly hyper competitive, and I think if you look at the last 2 years, the emphasis on domestic has increased so dramatically now, and people don't leave a single order now. I mean, it's almost because everybody loves domestic, right? I mean, that's why all my questions are always revolving around domestic. So people find this as more stable business compared to the export business, which was the exact opposite in perception-wise a few years ago. See, I think that's the lay of the land. I mean, you're going to have competition, and I think we're doing generic. And the way you sustain sale is you build your core brand at the same time you do new launches, and that's how the momentum is maintained. We had some very good launches this year. I mean, for example, we launched Eltromabag, Novartis' product. So that we are the only generic on that at this time in India. So that has done reasonably well. And as I said a few minutes ago, we're launching this quarter cabazitaxel and azacitidine tablets. So I mean, it's a good business and it's a good stable business, and I think we have a good setup, and I think we do well. So I think, but as I said, you have to keep the machine running with new launches as well. So I think that's a mix of base business and new launches and drive growth. Okay. Next question. We'll take the last question, please.
Thanks, Rajiv.
Yeah, thank you.
Thank you. The next question from the line of Vishal Manchanda from Nirmal Bang Institutional Equities. Please go ahead.
Thanks for the opportunity. Sir, lately Delhi High Court has granted an injunction with respect to Entresto. So basically, so will that impact NATCO?
We are not. We were injuncted on the product some time ago, Vishal. So as of now, we don't have sale on that product at all. So as of now, if in terms of financial impact, is zero. But obviously, it's an opportunity that was missed, right? I mean, if we had the opportunity to launch that product, and market size of the product is very good right now. I don't remember the numbers, but it's like upwards, it's hundreds of crores. So it would have been nice to have the generic version of that. But as I said a few minutes ago, I mean, you're going to get some right, you're going to get some wrong, but that's how the business is. So I think you just go at it. That's all it is. Yeah.
So just one more. Earlier during the call, you hinted at some launches beyond these large ones. So could you just one I heard was Yondelis, trabectedin. And was that in Europe or in US?
And what I alluded to, I think the gentleman was asking me specifically what are the products that we have, and I identified about 7 or 8 opportunities which I felt were reasonable opportunities. Among them is Yondelis. Yondelis is filed in both Europe and in the US market. Yeah? So US, as you know, we have a Para 4, we have an FTA on that. So it's a partnership with Sun Pharma. Similarly, we have a partnership with Sun Pharma in Europe as well for Yondelis. So even that. So I think that's. I have not speculated the time of the launch because at this time it's premature to say, but it's one of our more interesting products that we have in our pipeline.
Okay. And you also said lenalidomide in Australia also is scheduled sometime from now.
Yeah, we have settled it recently. Pomalidomide and lenalidomide, both together we have settled in Australia. So that is another interesting fact we have.
Got it.
Again, we're not disclosing the date because we're bound by confidentiality, but yeah, that's something that we have an approval on both these products in Australia already, and we're hoping, I think on the day of the launch, I think we should do reasonably well. Yeah.
Okay. And so just one final one. On the NATCO's working capital is significantly higher versus peers. So is it just because that your sales is lower because you report only profit share and not the end sales in US? Is that the reason for the working capital to appear apparently higher in reference to the sales? Or
our working capital is higher because of the stocking quantities, because we take a lot of risk, my friend. So I build inventory, I think I said a few minutes ago. We have inventory on all the pandemic products. When either you have it or you don't have it. We build significant amount of inventory on CTPR. That is one of the biggest contributors of the increase in working capital. I'll give you an example of what the problem is. CTPR, you have to build inventory before the Kharif season, before June, because majority of the sale happens between July and September. And if you don't have inventory, then you can't launch the product. You see what I'm trying to say, right? And if the launch gets delayed, then you're sitting on the inventory because all the sale gets concentrated in the 3 months. You know, so but that's the nature of the business. I mean, because we do so many pandemic and stocking products, I think that's the reason why we have high inventory. And what I also said was that we're hoping that we'll be able to liquidate them in the next few months based on our expectations and assumptions.
Got it. Thank you.
Okay, I'll take one last question because it started a little late, so I'll take one last question, whoever it is.
The last question is from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah, hi, thanks for the follow-up. This is regarding one comment which Rajiv you made that in Canada, if we make $10 million kind of a profit on Revlimid, we would be very good. Is it your expectation is much lower than that, considering the market is like between 4 players and you believe you have a better presence with the innovator REMS? That is one. And secondly, do you think this whatever profit we make can sustain for 3-4 years, or do you think that will go off in 1 or 2 years? It's a 1 or 2 year opportunity, or do you think it can sustain?
Honestly, my friend, I have no answer to any of your questions. See, the 10 million number is something that he threw at me. So then I answered in affirmative saying that will be a nice number to have. In generics, you can never predict what I will not hazard a guess on what's going to happen. What I said was if it holds up at that level, I think I'll be very happy. I think that's what expectation is. And how market formation plays out and all, it's a question that only time will tell. And I said I will give a better insight of it, because if you ask me this question, let's say in our call for December earnings, hopefully we'll have a call maybe from Jan, Feb, right? So then maybe I'll have a better idea of what's going on. So I think he was speculating, so I was speculating back. That's all. Okay.
Sure.
Right. Okay. I conclude.
Thanks.
Thank you, guys. Thanks so much. Yeah. Thank you. Bye. Well, thank you all. Again, any questions pertaining to what we discussed in the call, please feel free to reach out. It will also be put up on the website. Okay? The transcripts. Thank you all. Thank you all. Thanks.
Thank you. On behalf of Investec Capital Services, that concludes this conference. Thank you for joining us, and you may now disconnect your line.